Oh, look at how dark it is outside. Yes, it's me. Good morning with my Dunkin' Donuts coffee. I am Kenny Polcari, your host of the party, and it's still dark, although the sun is just starting to peek its head up over the horizon. And oh my God, what do we have to talk about today? And why would anybody be surprised with what happened yesterday? So today is Thursday, January 6th. 2022. And here are the things that you need to know. Jay Powell dropped the bomb on me. That's a reminder of the Gap Band 1982 single. You dropped the bomb on me. Tapering, rate increases, and reduction of the balance sheet all now happening simultaneously. Ouch! Investors were surprised, which leads me to ask, why? And what are we having for dinner tonight? We're going to have the potato gnocchi and a brown butter sage sauce. Now look, if anyone knows potato gnocchis, they're like small bombs in your stomach. See how I did that? Anyway, all right, let's do a quick flashback to 1982. The Gap Band, an American R&B funk band that rose to fame during the late 70s and early 1980s. Three brothers, Charlie, Ronnie, and Robert Wilson from Tulsa, Oklahoma, brought this song, You Dropped the Bomb on Me, to the masses. It was a discotheque favorite, right? It was about a girl, it always is, that changed his world, lit his fuse, were his thrills and his pills, taking him to the sky. He was never that high. And then she dropped the bomb on him. In the end, the song lyrics say that he will never forget what you done for me, baby. You dropped the bomb on me. And so it goes. Yesterday at 2 p.m. Eastern Time, investors were reminded of that song as stocks started to spin out of control after Jay Powell changed the world, lit investor infuses. He was the market's thrills and spills for all these last 10 years, and then he dropped the bomb, lighting the place on fire, stocks plunging lower and then lower again as the news of the Fed minutes started to sink in. The headlines this morning say it all. Fed minutes point to a possible rate increase in March. Officials are considering an earlier timetable for shrinking the $8.76 trillion bond portfolio. That was the Wall Street Journal. Dow tanks 392 points in stock sell-off after Fed signals faster rate hikes. That was Fox Business. Federal Reserve puts wheels in motion for balance sheet reduction on CNBC. And finally, Bloomberg runs with this headline: stocks futures slide as bond rout deepens on the Fed talk. That's on the Bloomberg headlines, right? So those are all the headlines, give you a sense of kind of how the media is presenting this. And again, I ask, why is anybody surprised at all? In my daily video from yesterday, which is in my morning note, you can find it on my Twitter, I broadcasted from the beach, where I noted that the storm clouds were brewing right above my head. The clouds were darkening and the wind and the ocean churning. You can hear it in the video. It was all very prophetic as I discussed what we were about to expect from the Fed yesterday at 2 p.m. in their Fed minutes, right? You can find that video on my YouTube channel, Kenny Polcari Media. You can also find it on my Twitter, at Kenny Polcari from yesterday. But let me lay it out again. All the hints that I kept referring to over the last couple of months. The first clue back in November, when Jay dropped the word transitory from the conversation, blaming Americans for not understanding the meaning of the word. I mean, do you remember that? Then St. Louis Fed President Jimmy B's comments in December, when he was still a non-voting member, saying that the Fed needed to be more aggressive and taper quicker and raise rates in tandem. That was the second clue. Raise rates when Jay said not going to happen at the same time. And then on Tuesday, Minneapolis Fed President Neely Kashkari, a non-voting member, surely you remember him from the role he played in the great financial crisis, made these comments only hours before Jay dropped the bomb, saying that the $9 trillion balance sheet was too large and that the Fed needed to act more aggressively to shrink it sooner rather than later, putting it out there in the public square so that no one can say this was a surprise. I mean, you can't even make this up. Who would believe you? And so stocks sold off. The smart logic algos scraping every news site out there, attempting to understand the headlines, and they were all negative essentially, right? which causes the algos to do what? Causes them to shift into an aggressive sell mode, while at the same time it causes them to cancel interest on the buy side, leaving a void in prices that results in that swoosh sound that you hear when you flush the toilet. I'm just trying to make it real because everyone knows what that sound is. And so that's what we heard yesterday, starting right after the Fed minutes. And nothing was spared, right? Every index got hit. The Dow gave up 400 points or 1%. The S&P lost 93 or 2%. The Nasdaq continues to get hammered, giving up 525 points or 3.3%. The Russell, not to be outdone, sells 75 points or 3.3%, and the transports gave back 235 points or 1.4%. The value trade lost 7/10, while the growth trade got slammed, falling 3.2%. Real estate gave back 3.3%. Tech gave back 3%. Consumer discretionaries gave back 2.7%. Communications lost 2.5%. Home builders gave up 2.5%. Retail gave up 3.4%, and tech disruptor names, the ARK ETF, got absolutely slammed, falling 7.6% as the ripple effects of the bomb permeated through the marketplace. Contraplays were the beneficiaries. SH, which is the pro-share short S&P, rose 2%. DOG, which is the pro-share short Dow stocks, rose 1%. And the PSQ, the pro-share short Nasdaq, rose by a whopping 3.2%. The VIXI, which is the pro-shares play on the VIX index, the fear index, rose by a stunning 7.7% as the VIX surged as much as 17%. Recall how I've been telling you that this was one of the easy ways to play the downside if you weren't going to sell your names in your portfolio, something that I did, because I am not selling my Apple, Microsoft, JP Morgan, IBM, Bank of America, Verizon, Procter & Gamble, Johnson & Johnson, just because the algos went into panic mode. I've expected this, so why should I sell it? Has the investment thesis in these names changed from Tuesday to Wednesday? Is Apple not the stock on Wednesday at 4 p.m. that it was on Wednesday at 9 a.m.? Yeah, it's a bit cheaper, but the investment thesis did not change, did it? I didn't think so. And if you've been reading my daily thoughts, you would have been prepared for this. Recall when I told you to strap it and buckle up, get ready, stay focused, and have your shopping list ready on the fridge, because it was going to get a bit bumpy. Well, here we are. And as the media continues to dissect and digest it, expect all the analysts and talking heads to come out and try to downplay it, saying it was a natural response, it was expected, which then leads me to ask, if it was a natural response and it was expected, then what were all those buyers doing in late December when they were tripping over each other to buy stock and take stocks to 2021 highs? Why didn't they just wait for this pullback? The pullback that's still to come. It's not like they weren't warned, right? So I'm just saying that at the end of the month, at the end of December, they're taking stock to new highs, and yesterday they're throwing them out. Expect to hear more about this today in the days ahead as everyone tries to downplay it, right? The same way they tried to downplay the warning signs of inflation. I guess the only positive to this is that maybe today we're not going to be talking about COVID and all its cousins. Now, take a note on this. The World Health Organization is now downplaying a new variant that was discovered in France last week or 2 weeks ago. It's called the IHU variant, which the experts say is showing little signs of spreading so far. IHU, apparently an acronym for I hate you variant, right? Clearly, they still haven't gone with the G, the GG variant, but we'll see. In any event, U.S. futures are lower again this morning. Dow futures down 30 points, S&P's down 9, Nasdaq down 50, and the Russell's lower by 9. The focus now on Friday's non-farm payroll report. Will it beat the number the way yesterday's ADP report did, or will it disappoint? My gut says it's going to beat, right? It's just my gut. Lots of other eco data out today, but I suspect that none of it is going to matter. All the chatter is going to be about what the Fed did yesterday and what the path for future monetary policy is now and what that means for stocks. Clearly, the ideas that I wrote about in mid-December are now more true than just speculation. Tapering will end sooner than April. Rates will rise much sooner than May. The increment of the rise will be the next speculative question. Will it be 50 basis points or will it be the 25 that the market expects? Right? But remember, the market also expected the tapering to be slow and gradual, and that rates would not rise in tandem with the taper. Both not true. The reduction of the balance sheet was a 2023 event. That wasn't until yesterday. Kabish? Remember, today we're going to hear from St. Louis Fed President Jimmy B. You can be sure that the markets are going to be hanging on his every word, trying to glean any new information that may have been tucked away nicely in yesterday's release. This morning, global markets are all lower as well. Japan down almost 3%, China down 1%, Australia down 2.7%, Taiwan down 7/10, South Korea down 1.1%. Chinese tech companies under pressure amid Beijing's regulatory crackdown on the sector, which again causes me to ask you, why are you putting your money in China at all? There are so many other places to play. And there are other ways to play China without that direct exposure to the market, without all that baloney that you have to run through every time the government there decides they're going to change the rules in the middle of the game. In Europe, the day is young. The sun is just making its way across the sky as it sends Asia into darkness and prepares America for daylight. Stocks across the region under pressure. The FTSE down 1%. The CAC 40 down 1.7%. DAX down 1.4%. Euro stocks down almost 2%. Spain down 1.5%. And Italy off by 1.8%. What does the latest Fed move mean for the ECB, the European Central Bank, or the Bank of England? That's what's going to be on minds of investors across the European region. The S&P closed at 4,700 last night on the low of the day, which usually means it's going to test lower again today. Recall the trend line support is at 46.69. If we breach that, then the December low should be tested around 4,500-ish. Nasdaq has broken both its short-term and intermediate-term trend lines and is about to test its long-term 200-day trend line, which is at 14,660. That's only 500 points from where we closed last night when we lost 520 points. So yes, ladies and gentlemen, we could test it today. And if we did, that would only put the index down 7% from the December high, still within what you would call a normal trading range. The consensus remains among Wall Street analysts that we're going to see a 10 to 15% pullback in the broader market as investors adjust to the changes in monetary policy early on. But then after this happens, and it might take, 3 or 4 months because it's going to change every month, then we would push higher to year end, or at least that's the consensus, which is why I said yesterday, don't take all of your retirement money for 2022 and invest it all at once. Never do that. Feather it in over time. Take advantage of the coming weakness. That is sure to happen as the Fed continues to push rates higher. Oil's up 5 cents this morning at 77.91. The 10-year Treasury is yielding 1.7%. The tide is high at 8 a.m. It's still dark outside, so I can't see if the storm clouds are still hanging around, but the weather report says that it's supposed to be partly sunny with a high of 77 degrees here in South Florida. Bitcoin and Ethereum are getting whacked, along with all the other crypto names. At 4:30 this morning, Bitcoin was trading at $42,000. That's down $4,000 from yesterday morning. And Ethereum is trading at $33.50, down $500 from yesterday morning. Other cryptos as well, kind of taking it on the chin. Remember, you can always text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it. It goes right into your contacts. Send me off an email, a text message, even give me a call. I'm always happy to engage and talk markets, planning, thoughts, concerns, ideas, anything that's on your mind. And you can follow me on Twitter and TikTok at Kenny Polcari and on Instagram at KennyP1961. Okay, so what are we having for dinner tonight? This is perfect. Potato gnocchi in a brown butter sage sauce. Now, the dish is really delicious, but the thing that made this so interesting is that the potato gnocchis, if you like them, they're like small little bombs. When you eat them, they hit your stomach, right? And so appropriate for today after Jay Powell dropped the bomb on us. Again, I have to say, was it completely unexpected? No, but I think what was unexpected was suddenly the change in policy in terms of rates, balance sheet reduction, and tapering happening all at once. So for this, you're going to need 1 pound of the frozen gnocchis, unless you make them yourself. You're going to need butter, sage leaves, red pepper flakes for the bite, and some shaved fresh Parmigiana cheese. Now, you want to start by bringing a pot of salted water to a rolling boil and then just let it sit until you're ready. In a large saute pan, you want to melt 1 stick of butter over the medium heat. You want it just to bubble until it starts to turn brown and nutty. Then you want to take it off the heat. Just put it aside. Now take your gnocchis and put them in the boiling water, right? They'll sink to the bottom because they're heavy. You know that they will be done when they all float to the top, very much the way ravioli does. Once they all float to the top, let it boil for another 30 seconds or so. and then use a slotted spoon to take them out of the boiling water. And put them in the saute pan with the brown butter, right? So now bring that saute pan back to the heat, put the heat on medium-low, and add the gnocchis to the brown butter. At this point now, you're going to toss it around a little bit, mix it up. You're going to add the chopped sage, not too much, the red pepper flakes, and a tiny bit of the pasta water, maybe 3 or 4 tablespoons, but use your head. Toss it, right? Make sure that it's coated up. Add some of the shaved Parmigiana cheese and mix. Now you're going to serve it on individual plates. You're going to take it out, serve it on individual plates, and you're going to use the rest of the shaved Parmigiana cheese to adorn each individual plate before you serve it. Now listen, if it's for me, I would always have even more cheese on the table if your guests want more cheese. You never really know, right? It's kind of a personal thing. I would enjoy this dish like I always do with a chilled bottle of Pinot Grigio Santa Margherita, which is a great wine to have with this dish, right? It's not too heavy, it's nice and crisp, and if it's chilled, it's just perfect for this dish. Look, the sun is on its way up, so it's moving across the sky, from Europe, rising now over the Atlantic. So you can see it coming up behind me. It's going to be a beautiful day here. I think I have to look out and see if the storm clouds are still brewing. I'll have to take a ride down to the water just to look out over the horizon to see what's happening. In any event, stay tuned and take good care. I'll see you in the morning.